Good afternoon, and welcome to the Center for Indian Country Development's conversation on what the updated Community Reinvestment Act regulations mean for Native communities. My name is Aline Shuramoff, Senior Vice President of Community Development and the Center for Indian Country Development at the Federal Reserve Bank of Minneapolis. Today's event is being held in partnership with several national and regional Native organizations, including the Affiliated Tribes of Northwest Indians, Indian Gaming Association, NAFOA, the National Center for American Indian Enterprise Development, the National Congress of American Indians, the Native CDFI Network, and the United South and Eastern Tribes Sovereignty Protection Fund. In 2022, we all worked together to host a listening session on the CRA Notice of Proposed Rulemaking. We are grateful to work in partnership again to bring you today's event. But before we launch our presentations and panels, I'd like to introduce Ted Howard, former chairman of the Duck Valley Shoshone-Paiute Tribes, who will provide our opening blessing. Thank you, Chairman Howard, for grounding our time together.
Thank you, Eileen. Yeah, I'll just briefly, I'd like to thank Phil for asking me to do prayer, and it's always an honor to speak to our Creator on our behalf. And I want to pray for a good day, a good meeting, and hopefully that everyone is able to reach their goals the way you'd like to see things go. I'll be praying in the Shoshone language. Haramapa, Kama Shikadawa, and Nari Chawadi. Rashunda, Vinamana Sovata, Tamuadanam. Oil on a Libya and the Tamashinevana, Oil and Sunikalaiban Boykan, Tamanevana, Tamohan. Abedamagawa, none of the Dana had come there. Prismada 100 had come there. Or you're going to down in 90 wine. Manda with Ramadan, how we do. So then dive on a check that so and be the sea. That's all and I want we done some of it. That's all I could take there. So song morning I him. Prismada, no, and again. Kita main oksia. That's on the high. So some of that, I have it done now. Or morning, I have no can if I had someone done the oil the pine. So this on the high. And when it doesn't, so it is under Tana. That's on the high. The man with the dumb oil and sun having them. I think that's in the oil now with dumb about him out mother. That's on the high. We don't know over the younger ones. Somebody gave them around up. He never thought to do what the sewer. That's none in the water. So that I'm known and get to none and they taking it. He never thought to sewer. So I asked up none in the water and so with them on the arm. That's all we are on the high. So they made it in the Ramon, everything can be in the lower show. Vi där såg vi en aivon. Han bara axeln dotter och det där. Han bara sin ögon och gudjon kan give arbete. Gudjon är gudjon and give arbete. Och för att såg att de upp och det var för att man lika många och jag men nu när så det kunde aldrig vara han och så där såg vi att och vad vet jag men man vill ge vad de där så den andra upp. Andra helt in ark he oil waden so it is sa so the name the dang or the one me alone so it's bamanda with the icon so we get up on the price on the hash oh it was the hande just on the hand they just sa pishaka one point hande oil on the on the icon and with the mother son she in the asna no so the morning that we can something new and I do that shown anyone. So we came on the show to happen. Some of them with the second avenue way, down there, some hard. Because I'm naming Neymar and Sudan, there's someone. Sunday to was so common like that's awesome. That's nothing though. As the answer, I got the man. We don't know so down now when me at Madame Bowet in the right neighborhood. So they couldn't see can have a young student. Oh, I know how to have money to work in. The going on a ride and challenge. So the land I do my way. So ungefär sånt här oss frågor. Back to you, Ellen.
Well, thank you, Chairman Howard, for those wonderful words setting the stage for our conversations this afternoon. Last month, the Board of Governors of the Federal Reserve System, the Federal Deposit Insurance Corporation, and the Office of the Comptroller of the Currency approved a once-in-a-generation update of the regulations governing how they implement the Community Reinvestment Act. This update holds opportunities for Native communities, and we are grateful to come together to discuss them today. So I want to thank you all for joining this important conversation. It is now my privilege to introduce to you Michael Barr, Vice Chair for Supervision of the Board of Governors of the Federal Reserve System. In this role, Vice Chair Barr oversees the supervision of banks and bank holding companies. As a Federal Reserve Governor, he also serves as a member of the Federal Open Market Committee, which decides on the appropriate level of interest rates and other aspects of monetary policy. Vice Chair Barr has made a priority of listening and learning about how Native communities and individuals experience the economy, and made a priority of understanding how the banking system is working in Native communities. I recently had a front row visit or a front row seat to this commitment when I spent time with Vice Chair Barr on a visit to the Flathead and Blackfeet reservations in Montana. We are so fortunate and grateful to have Vice Chair Barr launching our event today. Not only has he worked on CRA's role in expanding access to credit and financial inclusion for more than a quarter century, he has led the Federal Reserve Board's efforts to strengthen and modernize CRA regulations since assuming his role as Vice Chair in July 2022, continuing the work of former Vice Chair Lael Brainerd. So welcome, Vice Chair Barr. Thank you for joining us today and for your leadership in this landmark update to the Community Reinvestment Act.
Thanks very much, Eileen. It's just great to be here with you. I'm grateful for the opportunity to join you and all the listeners today as we discuss the updated Community Reinvestment Act regulations and what they mean for Indian country. The Community Reinvestment Act, or CRA, requires banking regulators to encourage federally insured banks to help meet the credit needs of the communities where they do business, including low and moderate income neighborhoods. On October 24th, the Federal Reserve Board, the FDIC, and the Office of the Comptroller of the Currency announced a final rule strengthening and modernizing the regulations implementing CRA. This historic update reflects years of public engagement and several rounds of rulemaking by the agencies. During this process, the Center for Indian Country Development was a key partner in encouraging input from Native community members and organizations. Indian country leaders described critical community needs, such as developing partnerships with financial institutions, increasing mortgage lending, and bolstering partnerships with Native Community Development Financial Institutions, or CDFIs, to expand small business lending. I want to thank you for sharing your perspectives. They inform the final rules in ways that have the potential to positively impact community development in Indian country for many decades to come. As the Federal Reserve's Vice Chair for Supervision, I oversee supervision of banks and bank holding companies. I've researched and written about the CRA's role in expanding access to credit and financial inclusion for many years, and have had the privilege of working with dedicated colleagues at the Federal Reserve, the FDIC, and OCC, who work tirelessly on this update. It's profoundly rewarding to have completed this historic milestone, and yet I know our work has just begun. We now need to turn our attention to building awareness of the opportunities introduced by the new regulations and to supporting their clear and consistent implementation. The potential impact of the new rule was reinforced for me on a recent visit with tribal nations in Montana, as Eileen mentioned. In August, I had the opportunity to spend time on the Flathead and Blackfeet reservations, where I met with members of the Confederated Salish and Kootenai tribes and the Blackfeet Nation. Tribal members described the need to address persistent housing challenges and insufficient access to credit in their communities. While there is a range of housing experience across Indian country, many communities face an inadequate housing supply, substandard housing conditions, or limited access to credit for home purchases and improvements. Research from the Center for Indian Country Development has found that Native Americans pay more for home loans than white borrowers on average, and the gap widens for Native American borrowers living on reservations. In a community roundtable, tribal members of diverse ages and income levels shared their personal stories of struggling to find affordable housing and secure the financing that they needed. My conversations with bankers and community leaders raised hopeful avenues for addressing these challenges. In a roundtable with community banks, lenders described efforts to expand capital and financial services in Indian country. Banks are also building their capacity to leverage federal housing resources and navigate the complexities of trust land. But these efforts are time-consuming. These lenders see an opportunity to simplify the administrative complexity of federal housing programs on tribal lands. Native CDFIs may also offer innovative ways to address housing and other credit needs in Indian country. These culturally centered community institutions are finding new ways to support positive credit outcomes and loan performance, and to facilitate mortgage loans in Indian country. The modernized CRA regulation includes important updates that can benefit Indian country by encouraging affordable housing and expanding access to credit, investment, and banking services in native land areas. I'm grateful for the work that the Center for Indian Country Development and our fellow regulatory agencies and organizations serving Indian country are doing to help communities understand these new provisions. The new rule reflects changes to the current CRA framework intended to clarify and to recognize community development activities in Native communities. I'm hopeful about the new opportunities these updates provide, and I'll highlight a few of those key changes today. One major change is that the updated rule newly defines native land area and eligible activities in those areas. In addition, under the new rule, certain investment and community development activities in these areas are given special consideration. This important update will recognize banks providing more banking services, community development financing, and volunteer work in Native communities. Another key change is that banks can now get credit for qualifying activities that take place outside of their assessment areas. What this means is that even banks whose assessment areas fall outside of native land areas can receive CRA credit for activities serving native land areas. The updates related to native land areas provide needed clarity to recognize investment in native communities. But there are, of course, many native people who live outside of these areas. The final rule also includes provisions that can be used to recognize activities benefiting Native individuals and communities outside of designated native land areas. Community development activities that serve individuals and communities outside of the native land areas may qualify for CRA consideration under another community development category. For example, a loan to a nonprofit organization focused on providing housing to lower moderate income urban Native Americans could qualify as an affordable housing community development activity. Another example would be loans or investments to facilitate community supportive services for low or moderate income individuals, such as childcare, education, workforce development and job training programs, health services programs, and housing services programs. Another important part of the new rule establishes a community development category that includes CRA credit for activities undertaken with CDFIs, including Native CDFIs. These are certified by the Treasury Department. With this update, the final rule provides clarity that a loan to a Native CDFI, including one serving a Native community inside of or outside of a Native land area, would receive positive CRA consideration. We know from research conducted by the Center for Indian Country Development that Native CDFIs play a key role in addressing capital needs and credit needs in Indian country. These and other updates to the regulations implementing the CRA open promising new opportunities for supporting community development activities in Indian country. One objective of the final rule is that it provides greater transparency and consistency in application of the regulations. For example, the new regulations include a list of impact and responsiveness review factors designed to standardize the assessment of a bank's community development performance. This is an important change that will guide structured evaluation of banks' community development activities. Finally, the definition of native land area in the final rule, coupled with data collection and reporting provisions regarding bank community development activity, will support greater transparency in how Indian country is served and provide stakeholders with a better understanding of the needs and opportunities for community development in these areas. In the years to come, we have an important responsibility to monitor and to assess how well the updated CRA regulations meet the needs of Indian country. In our role as one of the CRA's regulatory agencies, it will be critical that we continue to listen to and learn from your experiences. Native CDFIs and other community-based groups will also continue to play a vital role in these efforts by highlighting how banks are doing in serving low and moderate income communities. Thank you again for the opportunity to discuss this landmark CRA update. I look forward to working with you and learning from your experiences in the years to come as we apply this new framework in service of Indian country. With that, let me turn things back over to Casey.
Well, good afternoon, good day, and thank you again, Vice Chair Barr, for that wonderful overview of updates in the Modernized Community Reinvestment Act that really hold important opportunities for Indian country. I'm Casey Lozar. I'm an enrolled member of the Confederated Salish and Kootenai Tribes, and I have the honor to be the Director of the Center for Indian Country Development and Vice President here at the Minneapolis Fed. As Aline mentioned, Vice Chair Barr has made it a priority to directly engage with Native communities, not only through events like this, but through in-person conversations in community. And we're just grateful for his commitment to understanding the diverse economic experiences across Indian country and for his leadership on CRA modernization. I also wanted to echo Aline's appreciation for our event co-hosts. We're grateful to have partnered with the affiliated tribes of Northwest Indians, the Indian Gaming Association, NAFOA, the National Center for American Indian Enterprise Development, the National Congress of American Indians, the Native CDFI Network, and the United South and Eastern Tribes Sovereignty Protection Fund, in offering an informational and listening session, not only today, but during the CRA public comment period. And we're just really excited for the partnership and really look forward to this important work that we do all together as a collective. Vice Chair Barr's comments provide a really excellent foundation for our conversations this afternoon. We're pleased to have attracted a diverse audience to today's event. We know that some of you are learning about CRA for the first time, while others were really closely involved in providing their insights and feedback on the updated rule. The next part of our event will provide a brief overview of what the Community Reinvestment Act is, what it means to Indian country, and what has changed in the new provisions. For those newer to CRA, I think these presentations will provide an important context for understanding why the CRA matters to Indian country, why CRA matters to our relatives. Later in the webinar, we'll dive a little bit deeper into these updates. We'll discuss the opportunities that modernization of the CRA really present, and then have some time for some audience questions. Again, please make sure if you have any questions to put those in the Q&A function of the webinar. It is now my pleasure to introduce our speakers. We've got three of them today. So the first is Andrew Huff, who is the Senior Policy and Legal Advisor for the Center for Indian Country Development. He is an enrolled member of the Chippewa Cree tribe of the Rocky Boys Reservation in Montana and had a lengthy legal career before joining the center, including serving as a tribal judge. Our second speaker is Matt Lambert, and Matt is a senior supervisory analyst in the Community Reinvestment Act policy section at the Federal Reserve Board of Governors, where he helped modernize the regulations implementing the CRA. And our third speaker is Karen Bars, and she is the Vice President of Supervision, Regulation, and Credit at the Federal Reserve Bank of Minneapolis. In addition to serving as head of the bank's Community Affairs section, she participates in a number of different Federal Reserve System consumer compliance initiatives. So with that, I will turn it over to Andy, Matt, and Karen for your opening remarks.
Well, good afternoon, and thank you, Casey, for that introduction. I'm going to give you some brief background today on the CRA and why the new CRA rules matter for Indian country. But first, a disclaimer. The views expressed here are the presenters and not necessarily those of the Federal Reserve Bank of Minneapolis or the Federal Reserve System. Next slide, please. So the CRA was passed in 1977. It's a federal statute that requires that banks be regularly evaluated to ensure they are meeting the needs of the communities they serve through their loans, investments, and services, including low and moderate income communities and areas. It's part of a series of laws passed in the late 1960s and into the mid-1970s, prohibiting discrimination and the provision of housing and with respect to receiving bank services, loans, or credit. Under the CRA, a bank's retail lending activity and its community development activity are assessed on a tiered basis based on a bank's asset size, with smaller banks having fewer assessment tests than larger banks. There are 3 banking regulators that do these evaluations: the Federal Reserve System, the Federal Deposit Insurance Corporation, and the Office of the Comptroller of the Currency. Next slide, please. So under the rule, large banks, those having $2 billion or more in assets, are assessed under 4 separate tests. First, there's the retail lending test. Then there's the retail services and products test. Then there's the community development financing test. And then there's the community development services test. And very briefly, the retail lending test measures the volume of retail lending relative to a bank's deposits and also the geographic distribution of that lending. So here we're talking about loans and credit made available to individuals, small businesses, and small farms. The retail services and products test measures the availability and responsiveness of a bank's services. So here we're talking about branches, ATMs, online services. It also measures the availability and responsiveness of a bank's credit and deposit products and programs. The community development financing test measures the volume of a bank's community development loans and investments relative to its deposits, and also the impact and responsiveness of those loans and investments. So here, when we're talking about community development, we're talking about loans and investments in community projects, for example, an affordable housing project, as opposed to retail loans that are made to individual people or individual businesses or small farms. So lastly, the community development services test. This measures the activities that a bank undertakes to create the conditions for effective community development in areas like native land areas, which we'll be talking about more during this webinar. So these are things like partnerships with community stakeholders, financial literacy activities, and those sorts of activities. So under the new rule, large banks have to be assessed under all 4 of those tests. Intermediate banks, those with 600 million to 2 billion in assets, have to pass fewer tests. First, there's the retail lending test that they're subjected to, and then they can either go by the existing community development test, or they can opt into the new community development financing test. So intermediate banks have 2 tests. Small banks, those with less than 600 million in assets, are evaluated only under the existing lending test, or if they choose, they can opt into the retail lending test. Limited purpose banks are banks that don't necessarily do retail lending at all. So they are only evaluated under a modified community development financing test. Next slide, please. So why are the CR rules important to Native people? As many of you know, what we are calling native land areas under the new rules have long been characterized by both public and private sector underinvestment. There remain high rates of Native Americans who are unbanked. They simply don't have access in many areas in Indian country to banking services. There are also high rates of poverty that persist in many native land areas. In some areas that can be as high as 50% poverty rates. As of 2018, 45% of Native households were located in low or moderate income communities or distressed census tracts. And infrastructure and small business development is lagging behind in many areas of Indian country. So even though economic conditions have improved, particularly in the last 2 decades with the advent of native CDFIs, for example, and minority deposit institutions, There remains a substantial gap between the native land area economic conditions that we see today and the economic conditions in much of the rest of the country. We hope these new rules will help close that gap. For the first time, the rules recognize a geographic area called native land areas, within which banks can get substantial CRA credit for qualified community development activities that benefit the residents of those land areas. Also, under the new rules, any bank can get CRA credit for community development activities undertaken anywhere, and they're particularly encouraged to undertake activities in native land areas. Previously, the scope of CRA evaluations were limited to specific assessment areas, which sometimes did not include native land areas. So these are two fundamental changes that we hope will focus the attention of banks on native land areas and encourage greater lending, investment, and services to those areas. And with that, I will hand it over to Matt to talk in more detail about native land areas.
Thank you very much, Andy. And good morning to everyone, or good afternoon, depending on where you're located today. I want to say thank you to the Center for Indian Country Development and to all of the partner organizations that are represented here today. Would also like to point out that stakeholder feedback has been absolutely critical in forming the provisions of the CRA final rule, which we will anticipate makes clear to banks that they can receive CRA consideration for a range of activities conducted in native land areas and otherwise benefiting native communities. I'd like to spend the next few minutes to build upon the remarks that Vice Chair Barr made by providing some high-level overview comments on the elements of the final rule that the agencies believe will work to encourage bank loans, investments, and services in our communities. So the first slide discusses the definition of native land areas itself. As Vice Chair Barr mentioned, a major change included in the final rule is a definition for native land area, which is intended to do several things. First of all, it's responsive to feedback received in all stages of this rulemaking, which indicated support for a comprehensive geographic definition of native land areas, intending to provide clarity for stakeholders. As you can see from the slide, it includes Indian country defined statutorily in 1151, but then also includes other geographic areas that are typically considered native lands. Secondly, it focuses on lands and communities that, as noted by commenters to the proposal, have generally experienced little or no benefit from bank access or investments. Third, the definition aligns with existing established federal Indian law regarding lands and communities with unique political status. The agencies considered public comments to add areas to the definition, and while we made several adjustments from the proposal for clarity, the agencies were also sensitive to the many complexities in developing a definition, including the impacts of varying policies regarding land ownership and political status. And finally, we wanted to ensure there was data accessibility for stakeholders. So therefore, the definition utilizes robust and publicly available data files to define the boundaries of the geographic areas adopted in the final rule. Now, the agencies anticipate that we'll make the data readily available to stakeholders as part of the implementation efforts. We hope this will facilitate confidence in CRA eligible activities and enhance the transparency of the agency's consideration of those activities. Next slide, please. Now, a major change from the current CRA is the final rule creates a new category for qualifying place-based community development activities that are specifically targeted to and conducted in native land areas. This is one of the new place-based categories of community development that ties qualification of an activity to whether it provides benefit or serves residents of specific geographic areas. Agencies believe the category will address specific challenges in native land areas by providing stakeholders with transparency and certainty around the qualification of activities, therefore providing further encouragement for banks to serve this part of their communities. Qualification for activities in native land areas is similar across all of the place-based CD activities and requires meeting 3 specific criteria. Number 1, activities must generally benefit or serve residents, including lower moderate income residents of native land areas. And this is, to help ensure direct benefit to the people living in the targeted geography areas, rather than solely supporting redevelopment to these geographic areas more generally. Second, the activity should not result in direct or forced involuntary relocation of lower moderate income individuals that are residing in native land areas. And this is to not have a negative effect on the residents living in the targeted geographies. And lastly, the activity must be undertaken in conjunction with plans, programs, or initiative of governments, including tribal organizations, tribal governments, or mission-driven nonprofit organizations. The agencies think this criterion will help ensure that community development activities remain responsive to identified community needs. And I'd note that relative to the proposal, the final rule expands this criterion, this government plan criterion, to include the mission-driven nonprofit organizations. Now, with regard to native land area category, the agencies believe the expansion to mission-driven nonprofits will generally capture the plans, programs, or initiatives of things like Native CDFIs or Native Hawaiian organizations, tribally designated entities, Indian health centers, consortia, and other key Native designees focused on lower and moderate income individuals and communities. Now, the native land area, the activities in native land areas category includes 4 different specific types of activities, which you can see on the slide. Essential community facilities, which are activities that provide financing and other support for public facilities, such as financing tribal youth centers or elder centers, or even government facilities like health buildings or tribal administrative offices. Essential community infrastructure activities are those that provide financing and other support for important infrastructure projects, like bringing high-speed internet to tribal communities, or bank financing of critical water supply or distribution networks. Disaster preparedness and weather resiliency. This subcategory is designed to help individuals and communities prepare for, adapt to, and withstand natural disasters, weather-related disasters, or weather-related risks. Examples of the type of activities that would qualify for consideration under this subcategory include things like assistance to small farms to adapt to drought challenges, retrofitting affordable housing to withstand future disasters or weather-related events. And then finally, revitalization or stabilization. Activities would include such activities as the reuse of vacant buildings or activities related to a plan for a Main Street program. And I'd note that revitalization and stabilization has slightly different eligibility criteria. Under this category, a government plan or program must have an explicit focus on revitalizing or stabilizing native land areas, or a particular focus on lower moderate income households. And to provide an example of how this works in practice, a bank's loan fund for something like an industrial revitalization project in a native land area would qualify for consideration, say if the majority of employment opportunities created by this project benefited lower and moderate income residents, and the activity met the other required criteria. Next slide, please. Now, additionally, activities that benefit or serve Native communities more broadly that are not included under the activities in native land area category may qualify for CRA consideration if they meet eligibility criteria under another eligible community development category. These activities can benefit communities in native land areas, or they can provide benefit to Native communities living outside of native land areas. This means that under the final rule, non-place-based community development activities such as affordable housing, community supportive services, or economic development could also qualify for consideration. For example, here, a loan to build an affordable housing project that benefits lower moderate income tribal individuals could conceivably qualify regardless of whether that housing is located in a native land area. Next slide, please. Now, to further encourage banks to pursue activities that are especially helpful in meeting community needs, the final rule also evaluates the impact and responsiveness of a bank's community development financing activities through the application of specific qualitative assessment factors. As part of this, the final rule includes a factor for activities that benefit or serve residents of native land areas, with the reasoning that these areas in particular have often experienced limited benefits for bank access or investments. The impact and responsiveness review factor is available with respect to any community development activity that qualifies as community development, provided that it benefits or serves residents of native land areas. An example of an activity that might be considered under this impact factor could include a project to finance a tribal healthcare facility that qualifies as an essential community facility, and that also benefits or serves native land area. In crafting the final rule, the agencies also recognize that many native communities live outside of native land areas and are sensitive to the many complexities and needs associated with these communities. Therefore, the agencies believe that other impact and responsiveness factors under the final rule will recognize activities that benefit or serve these native communities more broadly. So this would include impact and responsiveness factors focused in other geographic areas with high community development needs, such as areas of persistent poverty or areas with low levels of community development investment. And to mention one more noteworthy change is the treatment of branches in native land areas. The agencies recognize that branch access is limited for many native communities and consider it appropriate to emphasize the placement of branches in remote facilities. Therefore, the final rule also provides positive qualitative consideration if a bank operates branches in native land areas. Next slide, please. And then one final point to mention is an element included as part of the final rule is that the agencies will be publishing an illustrative list of community development activities that are eligible for CRA credit. Additionally, it would create a pre-approval process for banks to confirm with agencies in advance of participating in an activity whether a particular loan, investment, or service is an eligible activity. The goal of the list and the confirmation process is to promote transparency and to provide greater certainty to banks and other stakeholders that their loans, investments, and services will qualify for CRA consideration. The agencies hope that this will make the process more intentional and help encourage partnerships between communities and banks. Establishing this example list is an opportunity to highlight activities particularly responsive to the needs of native and tribal communities. So in the coming months, we plan to be active in soliciting feedback from the public on what activities we should be including on these lists. For example, the U.S. Department of the Interior's Indian Loan Guarantee and Insurance Program, or the U.S. Department of Agriculture's highly fractionated Indian Land Loan Program. And with that, I'd like to turn it over to Karin.
Thanks, Matt. So it's my pleasure to be here today to talk about CRA with you all. As mentioned, I have responsibility here at the Reserve Bank for our CRA supervision of state member banks in the 9th Federal Reserve District, which includes Montana, Minnesota, the Dakotas, northern Wisconsin, and the Upper Peninsula of Michigan. So what I thought I would do today is, if we move to the next slide, thank you. Given that my team has supervisory responsibility for CRA, I thought I would provide some information about how we evaluate banks for CRA performance, and with a particular focus on Indian country. So one of the first things that examiners do when we start a CRA evaluation is to understand what we can about the bank's community. And as we'll talk about today, the assessment area that a bank operates in is really critical for evaluating CRA performance. But as we'll also talk about, the new rules will allow banks to receive credit for activities outside of those assessment areas. So examiners do things like gather information on market conditions, banking and credit needs in the communities. What are community development opportunities in those areas? What do the market demographics look like? All of that helps provide the examiners with context around what's going on in the communities that the bank is serving. If we are evaluating a bank that is near a native land area, for example, we always find it really important to try and talk with someone with the tribe or engage with the community as best we can to ensure we understand what's going on in that part of the bank's assessment area, to ensure we understand the economic conditions on the reservation, for example. We always have it's always beneficial when we can talk with someone from the tribe and really get a good understanding of the community and how banks are meeting the needs of that community. Once we gather that information and we have an understanding of the assessment area, then we're going to evaluate the bank's activities. We're going to look at lending levels. We're going to look at where the bank's loans are being originated. And we're also going to be, for the banks that are subject to it, looking at the bank's level of community development activities in its assessment area, including to tribal members and in native land areas. So on the next slide, I wanted to get into a little bit more around how the changes that we've talked about so far, that Vice Chair Barr and Matt and Andy also shared, I think really are going to be helpful as we look at how we supervise banks for CRA and the types of activities that are going to qualify as part of our reviews. So I wanted to really, one of the primary goals I wanted to address with you all today is the importance of both banks and community groups, including tribes, in doing what you're doing today. And that's understanding what qualifies for community development. Because banks, particularly the larger banks, have an obligation to engage in these activities, it can be very beneficial for tribes or other organizations to consider how they can arrange or seek loans or investments from banks that are going to qualify for CRA. And particularly with the changes that we're going to talk about today in native land areas, that's going to be particularly helpful. And it's important for the banks because they have an obligation to engage in these activities, that they also ensure that they understand what these rules require and what qualifies as community development under CRA. So there's several elements of the new rules that I think are going to be really helpful for banks, particularly in how they serve the needs of native land areas. So first, the definition of community development, as others have described, has been clarified and expanded, and particularly around activities that qualify in native land areas. That's going to be particularly helpful in a number of ways. What we've seen historically in our exams is that the current definition does make it a bit challenging to have activities qualify in rural areas, including in native land areas. And so the expanded definitions and the clarity around the definitions is going to be particularly helpful for banks in being able to identify qualified activities in those areas. That includes not only the changes related to native land areas, but the other changes that Matt mentioned related to having an illustrative list of qualified activities, as well as being able to have a regulator pre-review a potential deal to see if it qualifies. Another really key change that I think is going to be really impactful for native land areas and other rural areas is the ability for a bank to get credit outside of its assessment area. And that again has been somewhat of a challenge in some cases, in the sense that maybe a native land area isn't near a bank's assessment area. So this will allow banks to get credit in for those activities outside of their lending areas. And then lastly, the metrics that we haven't talked about much yet, but will allow us to be able to assess, compared to other institutions, how well a bank is doing in meeting community credit needs, particularly community development activities. And then also the impact and responsiveness factors that Matt mentioned will also be helpful in clarifying that certain activities in native land areas should be considered particularly responsive to credit needs.
Excellent. Well, thank you, Karen, Andy, and Matt. You know, the updated CRA rule is quite extensive, and certainly appreciate your perspectives in sort of boiling down the CRA rule and some of the implications that are very specific to Indian country and to our native communities. Just a few general thoughts. You know, just kind of listening to the presentation, there were really 4 terms that really jumped out at me, kind of high-level terms: transparency, certainty, clarity, and responsive. And I think as it was mentioned earlier, sort of the goals of the reform to CRA were really to try to land on those four words, right? How can we make this more clear to really encourage more activity in the communities, in our low and moderate income communities? I also wanted to mention, again, piggybacking on Vice Chair Barr's comments about just the appreciation for feedback from Indian country. It was a couple year process, if not longer, of sort of looking at this historic opportunity to update CRA, a tool that's particularly important to our under-resourced communities in this country. And the feedback that we received from our tribal communities and tribal leaders, tribal organizations were particularly important in shaping the rule that in ways that will benefit Indian country. And then lastly, the construct around native land areas and the importance of CRA in our tribal communities, but also the importance of ensuring that CRA is a resource and a tool for Native communities and Native people who live off the reservation or off trust lands. It's great to see sort of both sides of the rule really thinking about our relatives and the needs that we have and the opportunities that we have in Indian country. So I have the opportunity to moderate some questions, Q&A with the panelists, and just feel free, panelists, to jump in on any of these questions, piggyback off of each other when it makes sense. But maybe I'll start kind of at a higher level, knowing that CRA could be new to many of the attendees today on today's webinar. So I'm hoping you could help us understand, and the audience understand, really the size and the scope of CRA, and so what parts of Indian country's economy could be impacted by these changes? Where might the public see CRA related investments or lending in their community?
Well, thanks, Casey. I think I'll jump in on that first. I view the size and scope of the CRA as quite expansive, and it's going to impact both the public sector and the private sector of economies in Indian country. I think you have to look at both sides of the assessment tests. So in the retail lending area, that's going to encourage lending to LMI individuals, small farms, small banks. And the idea there is to really increase what they're going to be able to do, like closed-end mortgages, HUD 184 mortgages. If there's a small business that wants to become an 8A federal contractor, again, that's something that might count under the retail lending assessment. So in terms of the private sector, that side of the equation is really going to impact Indian country. In terms of the public sector, that's much of what we've been talking about today. Basically plans under the CRA that conform with a federal, state, local, or tribal development plan that impact LMI communities in areas in Indian country are going to be eligible. And that includes revitalization and stabilization activities, things like renovating blighted buildings, business improvement districts, brownfields. So these are the things that other speakers have been speaking about already, but also things like essential community facilities. In 2010, for example, on my Indian reservation, our hospital was wiped out by a flood. So that has since been rebuilt, and it was rebuilt using New Markets tax credits. That's essential community facility on Indian land. So that's the sort of project that might qualify for CRA credit under these new rules. And then, of course, it could also potentially qualify as a disaster recovery or preparedness activity. So there's going to be quite a broad array of activities that are going to qualify for credit under the new CRA.
Excellent. Thanks, Andy. Matt, were you going to jump in?
Yeah, I'll just jump in and follow up on that and just say, I think one of the benefits of CRA is that it's not prescriptive. It's really designed to have multiple options for banks to fulfill their CRA obligations. And so there really are, one of the things that we've tried to do in the final rule is make clear, that there's a myriad ways to do that. And, as long as banks are serving their entire communities, we are happy. And I think, in terms of practice and what that means for, Indian country or native land areas, is that there are many different options sort of fulfilling those obligations. And, it provides, a menu that will really want to have a lot of stakeholder feedback along the way in sort of figuring out what the most impactful and best use of those dollars are.
Thanks, Matt. So size and scope is quite large with regard to sort of the implications of CRA in Indian country, and the ability to really leverage the tool in partnership with the financial services industry for some of the unique needs that are in communities, that this really kind of the sky is the limit with regard to some of the new updates in CRA. So this is certainly, as we think about Indian country, there's incredible amount of opportunity. So it's exciting to see sort of how agile the rule will be for the unique needs in each of our very, very distinct Native communities. I wanted to maybe transition just a little bit. One of the unique features of the update is really around sort of geographic areas, and Karan talked a little bit about the older construct of CRA activities and assessment areas, and how that might be challenging, was challenging with regard to the rural nature of many of our Native communities. So I'm hoping that you can maybe add even more color around the importance of the geographic areas in the CRA. Why does it matter? Why are the reforms that include identifying native land areas potentially beneficial to Indian country?
So Casey, I thought I'd maybe kick it off, and then certainly welcome the others adding in additional thoughts. But I think for me, at its core, CRA is really about a bank serving its community's credit needs. So it's driven by, location and ensuring that the bank is meeting those needs. And I think over time, banking has changed very significantly since the last time this rule was updated. So what I think is exciting about these changes is that this new version is really going to address how banking is conducted in today's world, which includes electronic banking, mobile banking, and other things like that really, I think, were challenging to evaluate under the current construct. So if you think about increasing lending, increasing activities in native land areas, there are several elements of the rule that we've talked about, I think, that are really going to be helpful. I think Andy mentioned the retail lending areas. So not just giving banks credit for the activities that they're doing in their around their physical branch or deposit taking ATM locations, but really looking at where those banks are actually engaged in activities is going to be important under the new rule. Also, I guess can't really understate the importance of expanding the location element of what qualifies for community development. So a bank's ability to expand outside of its traditional lending area and invest or lend in areas outside of those areas, I think is really going to open up a lot of opportunity in native land areas. And that's where I think education on our part with our banks and the other regulators is going to be really critical, so that this rule is complicated. So it's going to be important for my exam team to learn about what's included here and how the rule has expanded, but also critically important for the banks to really understand the changes that are going to allow them to invest in areas that they wouldn't have maybe historically invested in under the current rule.
I could just jump in really quickly to add that the CRA works in combination with other laws. So there's another set of laws called the Fair Lending Laws, like the Fair Housing Act, the Equal Credit Opportunity Act. And those basically work based on protected classes. So they prevent discrimination against individuals in protected classes in the provision of housing or in the provision of credit. So CRA has always been a geography-based and income-based federal law, and the two two sets of laws work together.
Yeah, thanks, Karan. And Andy, and just one of the things that we've heard in Indian country is, financial services industry, banks, sort of building their capacity to be able to provide lending activity in Indian country, and them, certain banks becoming experts on certain types of activities, and perhaps in the past were constrained by their assessment areas. So there sounds like there's going to be an opportunity for banks to really become experts in an area of lending activity where Indian country has significant needs, and those lending institutions will have the opportunity to really expand it beyond, as you mentioned, Karan, the sort of traditional geographies in which those banks have done their work and received CRA credit. So it's almost like we're adding additional banking opportunities with native land areas because of the CRA credit that can be really leveraged by banks in those areas, which is, for me, it sounds particularly promising, knowing what those opportunities really look like in Indian country. Maybe just stepping outside of native land areas a little bit, and I think we talked a little bit about that, but I maybe just wanted to pause and sort of double down on sort of what the rule really means. When there's approximately about 70% of American and Alaska natives that are living outside of our reservations or outside of those native land areas. How about these residents see CRA-related investment in their communities from the new rule?
Sure, I can jump in on that, Casey, and then others can add to it. I think there's, great opportunity here as well. There are 11 defined community development categories included under the final rule. And any of those could potentially benefit or serve Native communities, provided they meet the appropriate criteria. And so that would, entail things like affordable housing, as mentioned earlier, or economic development. And they really could be located anywhere as long as they're not part of the place-based activities. And then secondly, to sort of further that, as mentioned earlier also, we've added impact and responsiveness review factors, which provide sort of a qualitative boost, if you will, for lack of a better term. And so, there are 12 mentioned in the final rule, but it could go beyond that as well. And these include things like supporting small businesses. Those would be businesses of under $250,000 in annual revenue, or they could be location-based as well. So it'd be low-income communities, geographic areas, or things like that. And so those could also serve Native communities outside of native land areas. And so we think there's multiple ways that we're encouraging banks to sort of invest, lend, and serve communities in other ways.
Excellent. I might have another question or two before we open up to some of the questions that we received in the on the Q&A function. And again, if you have any questions, please provide those, and we'll do our best to answer those today or answer them in future CRA engagement webinars that we'll do in the future. I wanted to maybe kind of go back to something Vice Chair Barr had mentioned, and that was kind of the work around CDFIs. The CDFIs, and particularly native CDFIs in this case, there has been eligibility for CRA credit for banks partnering with them for some time. So how do the new rules potentially benefit native CDFIs now? And what can native CDFIs and banks do to strategically prepare for these changes in the coming years?
It's a great question, Casey, and I'll jump in to start. It kind of goes back to the transparency, clarity, and certainty words that you mentioned earlier. I think we've done a number of things in the final rule to sort of help to achieve those particular goals. First, we created a specific category of community development eligible activities with these entities. It also includes minority depository institutions, women's depository institutions, and low-income credit unions. But what it does is provide certainty for activities with those institutions. And so those would include native CDFIs. Secondly, banks community development performance with these entities would be part of that impact and responsiveness qualitative review. So there's sort of a boost there also to encourage those. And then third, the rule specifies that retail lending focused partnerships with native CDFIs or with CDFIs will be considered when assessing responsiveness of a bank's credit products. And provided that's done in a safe and sound manner. And so we think all of these things, sort of give an added, amount of certainty in sort of qualification and qualitative, impact responsiveness. But then to say, the second part of your question, what can native CDFIs plan to do? I think implementation is going to be a critical part of this. So, by putting out the final rule, we created a framework, and now this is the part where we are really hoping to, educate people on what's in the final rule, and then work with communities in terms of future conversations on creating partnerships and other things that will sort of, lead to the highest and best use of activities.
Excellent. Incredible opportunities there for
Casey, just to add to that a little bit.
Yeah.
With respect to native CDFIs, a lot of times banks may be hesitant to work in Indian country because of the governance structure or because of the presence of trust lands. But now they have the opportunity to work with native CDFIs directly. And those folks are experts in economic development in Indian country. So working with native CDFIs kind of takes away that barrier and that hesitance of banks to work in native land areas.
Mm-hmm. Yeah, that's a good point, Andy. The partnership approach. I love that. Karin, if I could maybe switch over and pose a question to you. I think the examination process is particularly important, and as it relates to sort of Indian country, can you talk a little bit more about how examiners sort of gain that context on how banks are serving communities? How do examiners do this? And maybe on the other side of it, how do local communities, how are they involved in the CRA exam? How might tribes and native organizations engage with CRA in the future?
So I'm happy to answer that question, Casey. It's really important for us that we understand as much as we can about the communities that the bank is serving. So as I mentioned before, if we have a native land area near a bank, our expectation is the bank is engaged with that community, that they are building a relationship with tribe and tribal leaders, and that they're understanding what the credit needs are in that community, similar to all the other areas that the bank may be serving. So it's important for us to understand how the banks are doing related to that. So if we have a reservation, for example, near a bank, we do our best to try and talk with the tribal leaders so that we can not only understand what's going on in the community, but also ensure that the banks are meeting those needs. And if there are some gaps, what can be done about it, and how can we encourage the banks to build those relationships with the tribes so that they can ensure that they're meeting their credit needs. So that's one thing that we do. And then we also, especially under this new rule, are definitely going to want to understand, what kinds of needs are on the community and how those might align with the new community development definition. And I think we'll be doing a lot of education, not only with our banks, but also with the tribes or the other community members that we talk to as part of our exams, to ensure that they understand what CRA is and how they can engage with the banks related to particularly qualified community development activities. And then we also, I think, just want to ensure that, they have the resources they need to understand how this works and how this can benefit the tribe or the native land areas. The last thing I guess I'll say is that partnership that you mentioned, I think, is going to be really critical in building those relationships. So both the banks and the community groups and the tribes understand what this new rule is, and they're both committed to doing as much as they can to meet the goals of CRA and meet the needs of communities. all low and moderate income communities or other areas that need CRA investment, including the native land areas.
Excellent. Some good guidance, Karen, around partnership and really understanding the rule and understanding what the opportunities are with some of the more unique sort of tribal provisions that we see in the updated rule. And kind of the point you made, Karen, around just really understanding and taking the time to know what's in CRA is particularly important. That's what's really going to give the teeth to this, all of this work and all this input Indian country has brought together. And maybe as a way to transition into kind of the Q&A, we did receive a question that was around sort of the education and the technical assistance. So a question we received is, do the 3 federal agencies plan to design and launch an initiative solely designed to grow CRA investments in Native communities through ongoing education and technical assistance provided to banks and to Native financing partners? So what are your thoughts? Yeah, Matt.
I can jump in to start. I think this is, I think we're well aware that putting out this framework with the final rule is really just a first step. But I think it provides a tremendous opportunity for sort of what comes next. We are lucky in our system of the Federal Reserve to have the Center for Indian Country Development, because I think it will provide a central place that can be used as, for communications, education, and really implementation over the next phase of this project. So, with that, I think, once again, to stress that this is, we are looking for the voices of community in sort of how to do this right. And we will be having bank examiners work with stakeholders, work with banks, and, looking forward to that process.
Thanks, Matt. Maybe, even though I posed the question, I might respond to my own question. I did maybe just double down on particularly the Federal Reserve and the Center for Indian Country Development here at the Minneapolis Fed. We are fully committed to making sure that we're doing what we can to educate, to provide technical assistance, to sort of use the platform of the Center and the Federal Reserve to make sure that there are these opportunities to really learn what's under the hood of CRA, both from a variety of different stakeholder groups. Certainly, banks understanding the rule in the context of Indian country, as Karen mentioned, tribal leaders really understanding the rule, where the opportunities really lie. And I know over the next several years we'll be highly engaged out in Indian country, listening and learning and providing that type of context that will really ensure that this CRA has some teeth in Indian country. So certainly an initiative that we will take on, and I know our partners, the other regulators, are keen on bringing this updated rule to the communities and to the banks that they also supervise. We got a really good question here from one of our attendees, and it's maybe the question that I've been kind of asking as well as we've gone through this process. How do we know, what is the best way for tribes to understand if banks are complying with the reformed CRA in their community? And maybe if I just expand that question a little bit more, how do we know if the changes that have been put into place have had the positive intended effect on Indian country? So the big question here is, how do we know it's working?
I can start us off. I think folks in Indian country, native land areas are best placed to understand whether this is going to be working for them. They're the ones on the ground. They're the ones that can see whether small businesses are growing, whether infrastructure is being put in. So it's going to be clear to the folks who are already out there But one thing that's going to be going on is evaluations of these banks and depository institutions. And what we need to do is, if we look back on the CRA 5 years from now, and no metrics have changed in Indian country, we know maybe it's not working as it should. So that's just one idea. I would hand it out to others for other ideas.
I'll just throw in, one of the changes that we've made in the final rule is that for large banks, particularly over $10 billion in assets, there are some new data requirements, including on the community development side. And so I think we're over the next few years, when these go into effect, we'll start to sort of have better data in terms of kind of what we're seeing, and then we'll have the ability to sort of make changes and calibrate as makes sense as we go on down the road.
And then maybe the last thing I'll mention that is different than a lot of our supervisory work is that CRA performance evaluations are public. So while we'll have a time lag because we're not going to be implementing these new rules for several years, once we start doing the exams, tribes and other community groups will have access to those evaluations, which will explain, the bank's activities in detail and evaluate the bank's performance in meeting these new rules. So that'll be also a really helpful piece of information. Again, that'll take us a while to get data from those reports, but those will be certainly helpful in seeing how on a bank by bank basis these rules are being implemented.
Thank you. I'm glad you underscored sort of the data component and the overarching sort of analysis of whether or not the rule is having the type of effect that I think was envisioned when we received comments from Indian countries. So I think we're all eager to as the rule is out, we have some time before it. The examiners are really leveraging that rule. We have some time to really understand sort of the data and how to work with the data to see to what degree it is influencing the types of activities and encouraging the types of activities that really make Indian country an incredible place and really tapping that untapped potential in Indian country. So, I'm looking at the time and we're just about out of time. So this has been an energizing, really a thought-provoking conversation on a particularly complex but exciting topic. I just want to thank each of our speakers, certainly Vice Chair Barr, and all of our participants for your contributions to today's event. Again, I also want to thank our co-hosts for their partnership and again, bringing this discussion to Indian country. As Vice Chair Barr observed, although the new rule is now final, our work to help Indian country identify the opportunities in the modernized CRA has just begun. In the coming months and in the coming years, we really look forward to doing our part to share information about the new rule and to learning from your on-the-ground experiences with it in our tribal communities. I encourage you to follow our social media and our newsletters for more CRA resources from the Center for Indian Country Development in the coming months. Just a note, the recording of today's event will be available on our website in the coming days. You can kind of go back and kind of walk through some of the key takeaways and the slide deck that was shared by our panelists. And then before we close, I'd also like to take the opportunity to invite you to join the CICD Data Summit on December 13th. This is an event that will focus on the innovative ways that Native communities and policymakers and researchers are gathering and are working with data to tell a more complete story of Indian country, a more complete story of our tribal economies. We'll also have the opportunity to demonstrate some new data tools that we've developed. They're going to be available that help us and you understand the economic conditions and opportunities in our Native communities and all across Indian country. We have a really terrific lineup of speakers and I encourage you to explore the agenda and register for the event on our website. So with that, on behalf of the center and our co-hosts, I just would like to thank you for joining us today. Lam Lamps Hesia. Thank you.